Good afternoon, everyone. This is Henry, and as we get into tonight's free video newsletter, I wanted to bring you an idea in GLD. So gold has really started to pick up off of this 150 level that marked the lows a couple of months back, and I believe is part of a monthly signal that is getting ready to squeeze us up above the 200 price point. Now, of course, that will take some time. And what I believe is a little bit more in focus for tomorrow is the potential of a reversion to the mean. So again, gold has had a really good move up off of the 21 EMA. You can see that it was down about 1% today, and a move that really was in sympathy with the dollar. So if we look at the dollar index, the cash market would show us what I believe is kind of a potential for a little bit of a pop higher tomorrow. Again, I have to bring this to you knowing that the results of this will be very binary. So should the dollar index be down in a big way tomorrow, well, then this may not be applicable. But what I want you to do, is be prepared for if the dollar is up into this area and does not exceed it, essentially using about 106 for resistance. And if that is a spot that the dollar can pause and possibly begin to pull back, well, then from there, look for your spot to enter GLD. Now, the way that I would like to do it is a little more conservative. I don't really think that going out and buying outright calls is really going to be, it could work, of course, and especially if you have a quick rebound. But when you think about it from the point of view of a higher probability trade, I want to look at something like selling 2 of the 165 puts and then maybe buying one of the 167s. What this does is sets me up in a way where if gold just keeps rolling lower, well, there is a point where I will be assigned 100 shares from that 165 put. But if this trade can go for a credit, it sets up a way that is easier a little bit lower, also works in neutral movement, and if we do just rebound up into fresh new highs, well, then I'll take in the credit received. It is essentially looking at something like a put debit spread, which at first seems a little counterintuitive, but with the second additional short put, really makes that a viable strategy. So a lot of ways to go on about it, but that's one way to put yourself into a high probability strategy if those situations present themselves. And I hope that is helpful as you get into NFP tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful. And if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.